This is Alan Bush with ADMIS. In the stock index futures, we are seeing prices firming up this morning. We did have the economic reports earlier today coming in stronger than expected. Of course, that was housing starts showing some pretty good gains. Also, we had jobless claims showing a rather sizable decline. The Philadelphia Fed Index coming in about as expected, maybe a little weaker than the guessed, but overall, the economic reports were strong. One thing to keep in mind now, better economic reports could be viewed in the future as a double-edged sword. As the economy stabilizes here in the U.S., that puts more pressure on the Fed to possibly reduce some of the accommodation later this year. Of course, we are starting to see higher interest rates already developing. So the first clue that this is becoming the dominant influence would be when better numbers actually do not help stock index futures to gain. Right now, that does not seem to be the case so far today. But if we were to close lower on the day, that could be an indication that the Fed is moving more toward reducing some of the accommodation. Over in the currency markets, seeing the dollar index under some pressure, better economic reports really not supporting the dollar index very much this morning. Seeing the yen sharply lower, this after Japan's economy minister indicating that in his belief the yen has further to fall. So apparently they are pushing the yen lower for trade purposes, an indication that they do want the yen to fall further. In fact, right now it is closing in on a 2.5-year low. Our feeling is that the yen will continue to fall and we will see new 2.5-year lows for the Japanese yen shortly. Over in the credit markets, prices under pressure. This in response to the strong economic reports this morning. There is still a possibility of some good flight to quality gains as the debt ceiling situation appears to be intensifying, as Congress is likely to consider raising the debt ceiling with a more intense view and more rhetoric developing probably in the beginning of next month and ramping up to the crisis period in mid-February to early March. So we do believe that the bull market is over now in the credit futures market as the economy appears to be stabilizing. Any flight to quality gains, and they'd have to be strong flight to quality gains, we feel are selling opportunities in the Treasury futures market. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.
$126, 169.79. I'm selling this.